Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the June 26th, the fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much, much more important than that, during this next 30 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered there, too. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on fantastic, fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got all the indices in the red. The Dow's down 500 points. S&P 49, NASDAQ 144, Russell 24. So they're down about 2%. Everything's over 1% as we speak right now. Spot volatility index is up 5%, trading out at 33.83. Still hovering around that 50-day exponential moving average level out there. Gold's up $12, silver 14 pennies. Light sweet crude off 28 cents, and T-bonds are up nearly 1 full point out here, trading out at 179.04. Lead the charge dollar-wise, the upside. Ticker symbol API, that's Agora Inc., up $28, 141%. Out there. Synex Corp is up 16%. Stamps.com up 9% or $15. Core Logic up $13, 25% out there. To the downside, it's Booking Holdings, $63, nearly 4%. Google's off 50. Facebook is down 17. Transdigim Group down about 16. And Tesla is off 15 buckaroonies as well. So the first question, we've got a couple of questions that are in. Let's go for Ruby's question first. Ruby is asking about the Russell 2000, of which she is short. So if we take a look at the Russell 2000, we're going to look at some, let's do this here. Here we go. Let me pull over this set of charts. So one of the things we're going to answer, here's what we're going to do. We're going to evaluate. So one of the time frames, there's two time frames that Ruby uses typically to make her trading decisions on the Russell 2000. She likes looking at the 15-minute time frame chart. So if she likes looking at it, Stevie likes looking at it too. So let's go see if there's any kind of signals out here and on the 15-minute time frame. And at this stage here, the only signal that I see, Ruby, is that price right now in this 15-minute bar is trading above what? Stevie's red line out here. And this is a bullish structured profile. So if you're wondering where price is headed to, now look, it does need to clear this little swing point out here, this little doji candle that was at 12 midnight. No, 12 noon. What am I talking about? 12 midnight, 12 noon. Hello, I'll wake up. So if the price can get above that, but even if it doesn't, Ruby, I mean, that's it. Seems like a resistance area, but price above Stevie's green line. This is telling us, the 15-minute chart, price wants to get up to that 1390 level. Not so much 6 points. I don't know if that is going to cause any pain to you or not, but that's what the 15-minute time frame chart is telling us. Did you say 32? Let me see. What did you say here? I want to make sure I get the right time. Yeah, 15 and 30. Now let's switch over. So if you look at the 15-minute chart out here, let's just Ruby, this morning at 7:15, you saw a TD9 count pattern taking place right at the TD9 count breakdown level, which is at 1410 out there. So whether that helps you or not. Now let's go look at the 30-minute chart here for Ruby. So the 15-minute tells us that price wants to move higher. What's the 30-minute time frame chart tell us? Well, the 30-minute time frame has a nice leg G, wave number 7 bottom. Don't pay attention to the number 7. That's part of the TD9 counts, but look at the small letters out there, and you'll see letter number G. That is also a bottoming signal. It has a bullish structured profile. This says that price wants to go tag Stevie's red line. That's 1388. Since the top of its 30-minute box is 1390, pretty good chance that at least you see a spike. But now, if there's a close above 1391, that's the top of its 30-minute profile out here, then Ruby, this suggests that price wants to get to the breakdown level, 1406. And we just took a look at a breakdown level on a 15-minute time frame chart. It would work the same way here. So your real key level on the 30-minute time frame is going to be 1390. And guess what? The beauty of it is Stevie's made it easy for you. Not really me, but the charts did. It's really going to be, we'll call it 1391 on the 15-minute time frame chart as well. Now, as long as we're here surfing around, let's go look at multiple time frames. Let's give Ruby more bang for her buck out here. 60-minute time frame, what do we have out here? Not much, so we're going to skip past that. Now, there's nothing that's providing me with anything to change what we just looked at. If we take a look at the 2-hour time frame chart, what do we have? Prices coming back to support. The bottom of its bullish structured profile out here, so this supports the bounce that we looked at in the 15 and the 30-minute time frame. If we look at the 240-minute time frame, we're going to see price also pulling back to the bottom of its bullish structured profile here. So this also supporting what we just looked at on the short-term time frames. And we get a triple, a quadruple. We got a triple Indy out here because we also have a bullish structured profile on the 5-hour time frame chart. So this level of support has held, and so this supports that bounce. Now, does that help you? Is the question, at least with regard to what the charts are doing. With regard to the daily time frame chart out here, what do we know? Not much. What do you mean not much, Steve-O? You know, if we take a look at just the indices out here, this happens to be the S&P, but most of them look the same way. Remember this big, huge downdraft day, the day of June the 11th out here? Now, in the case of the S&P, this opened at 3123 and closed at 3002. So that's a big 121-point move. It was more than that if you take a look at the close from the prior evening out here. But what's interesting is price is just consolidating with inside that bar, give or take out here. So really, the market has not done much since June 11th. That is in essence what I mean. Don't get caught up into the numbers, which are large, 500 points down or what have you. It's really all about where is price trading? And is it trading into, is it breaking key levels of support? What are key levels of support? How do you find those key levels of support? Of course, it always depends on your time frame out here. Now, with regard to key levels of support and answering that question, yes, the Russell 2000 right now, well, guess what? It hasn't busted a key level of support. Not in the current profile out here. You see, the bottom of the daily profile here, Ruby, is going to be 1381, and price is trading at 1384. And you can see the little rising trend line out here, so support has held for the Russell 2000. If you take a look at the NQ out here, that's going to be panel number 2. Has anything been busted there? No, not yet. The bottom of its bullish structured profile hasn't even been tested. But it doesn't have to be the bottom because support is between that level, 9831, and the center, which is 9908. Now, those are really important levels to watch come the end of the day. But what should transpire here in the next, hour or so? The markets are telling us, at least the Russell 2000, is it wants to bounce a bit. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the Taz Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The Taz Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So Dow's off 554, S&P 53. I want to review the chart we were looking at as I did the 1 o'clock segment, because I think this is really important for each of us to understand. At least you can understand my thinking and process out here. So this is a 240-minute time frame chart here for the NQ, and I'm focused on the NQ because when the market does crack, when it truly does break, the NQ is going to hold up better than the other indices. So here's what I'm saying. Don't go short the NASDAQ. Now, somebody might say, well, geez, maybe the NASDAQ's going to fall just as hard as it rose out here. And I suppose that's a possibility, but not likely, if you know what I mean. Well, maybe you don't know what I mean. Let me just stay focused here on really what I first want to present. Then we can get into the minutiae, so to speak. So why did I choose a 240-minute time frame chart? Well, I didn't. The market did. I went through multiple different time frames looking to find. See, I've always been, as I started this process, actually deep into the process of technical analysis, I finally figured out, well, I'm always trying to figure out how to improve my decisions out here. And so how do you do that? Well, in this case here, what I was looking for to answer the question, when is a retracement just coming back to a level of support? When is a retracement just a retracement? In other words, in the retrend, and so don't get freaked out about it. And that's especially important in today's day and age where the moves are so large out here, because you could get focused in on the numbers and think the world is coming to an end, or think that you just hit the jackpot. Then neither may be the case out here. So when I looked for the NASDAQ, and I specifically focused on the NASDAQ because it has been the leader, so I'm looking for signals that this has cracked. And it turns out, and I can prove it to you, I can show you out here, if we take a look at the 240-minute time frame chart, what we're going to see, if you use Stevie's methodology, remember, when price breaks a key level of resistance or support, what do I say? How many bars do we need to see? I'm not talking about the kind of bars that are closing down in Florida here. which, holy cow, holy shnikes out here. Wait till I show you some of the data, because I'm a data guy. I'm a bean counter, you know what I mean out here? 2 bars, that's right, Oda Nobunaga. So if we take a look at the 240-minute time frame chart, it's the red horizontal lines that you're looking at. Those are the breakout levels. And what we can see here is we can see that there was a crack back at about 2 o'clock in the afternoon on May the 13th. But if you look at the following bar, no 2 bars below that area. And so we saw that little jostling around take place during that little time frame here in May. So price never gave us the change in trend signal. Now, look, if I put this on a 300-minute time frame chart, we can do that here real quickly. We'll put it on the 300-minute time frame chart, and we're going to see that that is not the case. So we don't have the same patterns out here. I've got these breaks out here in the early part of June 12th. So just a few days ago. So this time frame isn't giving me what the 240-minute time frame is. So you can see I just went through and I surfed all different kinds of time frames out there. And I just use the word surf. That's because if you spend any time on the water, you're always trying to watch the waves. You're trying to time the surf, so to speak. And that's all we're doing here with the TD9 count is we're trying to time the surf. We're trying to find something that gives us the highest probability of being able to make a determination of what. And so this way I don't have to make that determination. All I have to do, all you have to do, is just pay attention to the numbers. It's just a numbers game. And so that number was 99.45.25. That's another number you want to have on your pad of paper. Do we get a close below that at 2 p.m.? I don't know. But if we do, then today's close will be an important signal to you. Why? Now, if you take a look at the 9 count, the actual high out here was the 9 count at about 2 o'clock in the afternoon. Or 2 o'clock in the morning? No, 2 o'clock in the afternoon yesterday out here. Yeah, was it yesterday? June 23rd. No, so a couple days ago out here. So you can see it forms the 9 count, and then price pushes its way back to support. Whenever you get topping signals, it's very important to understand where support is. Has nothing to do with this little swing point out here from 2200 hours out here. Stevie, I like swing points, but with regard to, I want to understand where did price break out? And this tool here really makes it easy. It makes it so simple. You just have to do the counting out there. So I simply wanted to share that with you so that you've got that number to pay attention to. And what are the reasons to do that? And what are the reasons to pay attention to the NQ out here? Now, this is the daily time frame chart for this. I haven't actually shown you guys this chart. I don't know if I've ever shown you guys this chart here. Maybe I have. It doesn't matter whether I have or I haven't out here. This is part of my TD9 package of tools out here. But all I'm looking for is I'm looking for 2 successive, and I'm worried about the downside. Don't worry about the upside counts out here. I'm looking to see for 2 successive closes where each close is below the close of the prior bar out here. Now, you're looking for the red numbers. You realize that that only once have we had 3 closes since that March low inside the NQ. We've only had 3 consecutive closes. That occurred right here, even though number 3 is not out there, just because of the way that I've got the tool formatted right now. But here would have been the 3rd close on April 21st. We have not seen, and there's only been a couple of bars where we've seen 2 closes. The first one took place out here on May Day, May 1st out there. Price closed above that close the following session. We had another one out here on May 13th. Price closed back above that close the following session out here. And guess what? We haven't seen another one since. So any of these, and even today would just be bar number 1 of a close below yesterday's close out here. So these coming in 2s out here, 2 to 3, move consecutive days lower out here, at this stage would be considered nothing more than just a knee-jerk reaction. So in order for us, because I see some questions that are coming in about the short side of the market, and you know how my belief about the market and taking a look at historical data, and that the Dow, just now that we've got enough data out here to keep it real, the Dow is the one that's going to, and the Russell are going to be the 2 that go ahead and take price down to those March lows and below that. But that can't begin. It just can't begin. Well, it can begin, but it won't really. We need harmony out here, and we need some proof from the markets, and that proof must come from the NASDAQ out there. So we need to get below. We need to get at least 3 days in a row, 4 days really in a row out there with just simply continued price movements. Otherwise, these things can be knee-jerk reaction. Now, the cool thing is that this even gives us a figure, 98.4550, of a breakout level of support that you would like to at least, just using the 2-day program out here, that you would like to see price break in the NQ. So I don't want to make it all about the NQ, but guess what, folks? It really is all about the NQ. Now, we can take a look at other things out there, but this should be an area of focus. You want to see the strong dog weaken. I'm not saying, in fact, I'm specifically saying, I don't know if I could yell it louder, but who's going to hear me? Maybe some neighbors or something. But short, be like Ruby. Be like Ruby. Short the weak indice out there, Russell 2000 or the Dow. Leave that NASDAQ all alone, if you would. So let's go to a couple questions out here. Is someone leaning on the keyboard? Me? I'm not leaning on the keyboard out here. Let's go take a look at the first question coming in from George in Tampa. So George says, Steve, I'm long CYDY. I've got that up in this little corner box of my screen out here. You can see this thing is just a few days ago was trading at $3. It's at $7. So it's over 100% return out here. But what I like is George said he's now got free shares. So he can stay in this thing as long as he wants. And that is a beautiful thing. That's technique number one, taught to me by Obi-Wan Kenobi out there. Nothing like having a portfolio of free shares. We'll be right back, folks. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we'll take Cytodyne Inc. out here. Let's see what they are, who they are, what do they do out here for George and Tampa. So their company profile is they clinical stage biotech company which engage in development of innovative treatments for multiple therapeutic indications based upon leronlimab, whatever that is out there. But let's see if these guys, they're a clinical stage biotech company here. How are they doing? How are they doing income-wise? Well, that's interesting. Through 2019, they've got zero income. They have not produced one sale from all this work that they're doing out there. So, hey, that's so George, I'd ask you this question here. These guys have just been doing nothing more than bleeding money out there. You should feel good about your decision here to go to free shares because all these guys are doing is burning through cash. Now, there are hundreds of thousands of small businesses or businesses around the globe right now that are also losing money, and they'd like an investment. Are you willing to invest in those small businesses? And you've got to be able to answer that question out here. But what George is asking me for is some kind of analysis. Now, really hard to do analysis on a stock like this. I'll give you, what it's telling us out here. Today is going to be bar number 7 of a TD9 count. You are in wave number 7. That's letter G out here as well. And so on letter G, and this is where you can see a top form out here. I don't know whether it will or it won't, but this is the daily time frame. I think when I go to the weekly out here, George, or the monthly, the data is basically non-usable for us. Where's support on this thing? 465, 301, and 225. I mean, those in essence are the support levels on anything like this. So I just like the free share deal out here. Here's the weekly chart. This isn't going to show me a whole heck of a lot out here. Yeah, prices extended, moving higher, less relative energy out there. But I think you, on a chart like this, I can clearly state this, George. I don't have the technical skills to be able to help you figure out where this thing is headed to. But what we do have is we've got enough of the skills to go take a look at fundamentally, what does this company do? What's its balance sheet look like? We didn't do that. I would say you might want to do that. But here's the deal. You've got free shares, so you can let this thing ride. Maybe they're going to find a cure for whatever it is that they're trying to find a cure for. So I hope that helps you out, and thanks so much for writing in, and have a nice weekend. Ian writes in, he says, hey, Steve, I'm not in the market right now. Just want to ask you what you think. Ask you what you think is a short setting up, or are we setting up for a bottom? So it really depends on the indice that you are really taking a look at out here. So the market is set up for a short. What do you mean by that, Steve-O? Well, if we take a look at their daily time frame charts out here as an example, here's the ES Mini, here's your Gartley sell. So again, price trading with inside that June 11th box out here. So it's setting up. Where would you short from? The better short out here clearly would be Stevie's green line, so around 31.17. So, the market, the ES Mini is set up for a short. The NASDAQ is set up for a short. The NASDAQ this week, if anything transpired this week, it was a few days ago when the NASDAQ, the NQ, generated a bear sash candle. Now, generated that bear sash candle, generating and confirming the Rhodes momentum indicator top. Well, Steve-O, if you're telling me on a daily basis this confirmed a Rhodes momentum indicator top, what's all that other 240-minute, shenanigans out there? So we have to interpret the market. We've got to understand what's the market communicating to you and us right now. In fact, to try to answer Ian's question out there, is the market set up for a short? Yes, but his question really is, should I go short right this very second? I mean, I think that's what his question would be. Of course, I'm paraphrasing for Ian as if he were right here talking to me, but that's what we do. That's what I do out here. So the better short, though, Ian, would be as the NQ gets back up to resistance, which could be the 10-151 level, which is why you're going to watch that 240-minute time frame out there to help us understand whether or not that is a possibility. We are coming into the end of the month. We are coming into fund buying out here. And after this show, we've got the expert on fund buying out there. So, David will tell you. I don't know what he'll tell you out there, but you can listen to the show, and then you'll know exactly what he would tell you. In the case of the Dow, the Dow's got a or it's got a Gartley sell pattern out here. So you got a Gartley sell pattern, but price hasn't busted through any level of support. 24,266 is its key level. Now, folks, write that down on your pad of paper, because it closed below 24,266, as Peter said, for 2 bars in a row. Then you're headed back into the March lows out here for the Dow. So every one of the indices has a topping signal for its daily time frame out there. But is the market going to bounce? Well, we've already spent a little bit of time on the short-term time frames, taking a look at that, on the 30-minute time frame here for Ruby. It may just be a counter trend rally up into Stevie's red line, 1386, or that 1391 level is what we were really taking a look at out. There's nothing that has changed since we did that analyzation half an hour ago or 20 minutes ago with regard to the Russell 2000. If we look at the ES Mini, who did? Oda Nobunaga, or was it Peter? Might have been Peter, I think, that identified the TD9 count bottom. So you got the TD9 count bottom occurring on a 30-minute time frame, back at another prior Rhodes momentum indicator bottom signal. But more important than that, you're inside a bullish structured profile. No, this tells us we've got strong support out here. Strong support out here between 30.11 and where we're trading right now, about 30.18. But price should make its way up to Stevie's red line at 30.28, and then above that, 30.37. Above 30.37, 30.69 becomes the price target on the ES Mini for its 30-minute time frame out there. Is he on the phone? Probably have a phone call. We do have a phone call. Okay, let's go to, we've got a caller, so we have call ahead seating out here. So let's go to Mike in New Hampshire. Mike, thanks for calling. Thanks for holding. How are you?
Well, thank you, Steve. I appreciate all your guidance, by the way, in attempting to educate me. I'm interested in natural gas. I believe that one day, I don't know if it's next year or the year after, it's going to be probably a lot higher than it is, I think. So could we look at the long-term time frames, maybe weeklies, monthlies, and quarterlies? I don't want to ask the question, how low can it go, but what do you think would be a good the next downside target to begin acquiring vehicles around natural gas?
Well,
for long-term investments.
Sure. So for me, the answer to your question would be I'd have to see some kind of pattern. Now, I've got the continuous contract up on my screen right now. That's the only way for me to be able to conglomerate all the futures data out here to assist us with this question. Now, on the quarterly basis, the breakout level is $1.62, and we're trading below that right now. So the quarterly time frame says this could have a bit lower to go now the quarter's not over, right? So we've got the end of next week. But if I think, I don't know, when is it Thursday? I think it's Thursday. Might be the end of the month out here. But if at the end of June, price closes above 162, then that's telling you that on the quarterly basis, you said long term, that a key level of support has held. Now, I want to answer your other question, though, which is, where should you be looking perhaps to take a long-term position inside of natural gas, since that's your inclination. So I'm going to ask you to hold on through this break, Mike, and then we come back. I'm going to go answer that for you. Okay?
Thank you.
You've got Steve Rhodes with TFNN. With Mike in New Hampshire, we'll take a look at natural gas, and we'll return in just a few.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're on the line with Mike in New Hampshire. We're taking a look at natural gas. So one of Mike's questions is, where's the next price target to the downside inside of natural gas? So to answer that question, Mike, what I've got is my A to B equals CD price projection tool. It's kind of like Flow's progressive tool, only it works on this chart out here. So since price yesterday sliced right through the 1-to-1 A to B equals CD level, that price projection was 158. It did it with a wide-ranging bar. That is suggesting to you that it wants to go to the 1.272 Fibonacci expansion of that A to B leg. That price point is 144. That doesn't mean that that's where the bottom will occur. Below that, we'd be looking at $1.26 out there. And all of those are game. Now, in A to B equals CD folklore out here, what you and I need to see to confirm a bottom would be some type of bullish reversal candle. We clearly do not have that yet. I don't expect we would see that today. If you did get that, Mike, then what you'd really be looking for, now the active contract is August, is you really need to see a close above Stevie's red line. And that's priced at $1.64. So any type of counter trend rally up to $1.64 is just a counter trend rally. Closing above that for 2 bars would suggest a move up to $2.05. We're not there. Now, it's a possibility that this could unfold because yesterday was wave number 7. That is letter G. And wave number 7s can be tops or bottoms. So you want to be on the lookout for a potential signal. But if we see a lower low on Monday, as an example, then what you and I will know is that 7th wave move, you can park that off to the side. That's not going to help us to identify a bottom. But what you're really looking for is the longer term aspect of it, is what I heard when you first posed your question. So for that, I really go over to the weekly time frame chart. And the weekly time frame chart is showing us that this week is going to be bar number 7 of a TD9 count pattern. TD9 counts, when they identify tops or bottoms, Mike, they can occur on bars 8, 9, or the bar following 9. So that says that you could see a bottom inside of natural gas next week, the week after, or the week after that. So sometime over the course of the next 3 weeks from this pattern standpoint. But we can also see on a weekly basis that price is pushing lower, doing with less relative energy. If we were to receive a bullish reversal candle next week, and that's a possibility, that would be a signal of a long-term bottom. So does that help? Now, you don't have the candles and the patterns right now to confirm that, but that's what you should be looking for.
that helps. Thank you very much.
You know, I know you'd like a price, but I don't know what that price will be. I'd rather the charts reveal to us what that price is going to be and where the turn is going to come. So there's nice patterns inside of natural gas. We just need to now see those bullish reversal candles to generate a signal for us, a buy signal for us. And on a short-term
Okay, we'll wait for those. I just think it's been, when I look at a yearly chart, looks like it's been declining for something like 15 years because we've had so much supply. And I don't know, I would imagine that one day demand will equal supply, and perhaps this will turn around one day.
You know, if I take a look at the yearly chart for natural gas, its high, most recent high was in 2005. You know, yep. And like the other quarterly chart that we were looking at, I mean, it's below all the pricing that I have, but my chart only goes back to 1996. So, you know, at some point in time, it'll bottom out there. But as far as when,
I'll try to be patient then.
Be patient. Yeah, exactly.
All right.
Hey, Mike,
thanks
for
Steve.
calling. You bet. Have a great day. Have a good weekend. And so now let's go to our next question here. Let me see what we've got. I believe this one is from Tom G. And Tom writes in, he says, good afternoon, Steve. So good afternoon, Tom. I traded this yesterday, this being SPXS, so that's the short. Bought it back and bought back in towards the end of the day. High sevens, low eights. Okay. I'd like to know your thoughts on the SPY and the VIX to see if maybe I should hold this over the weekend. So how are we going to answer that question for Tom? Tom, do you just want me to answer that question just based upon the S&P or based upon now, because your email came in before I started the show, so you didn't know where I was going to go on the NASDAQ, and my focus was on the NASDAQ. So would you take your signal, Tom? I'm even though Tom can't answer me, he can through mental telepathy, so I'm going to ask him to really think. And I want everybody out there to think of a number. Think of a number. Let me see if I can guess that number out there. No, I'm just kidding. We're not going to go down that path. So how can we, so on the S&P, well, here's what I'm going to say. I'm going to come over to the VIX index. VIX index right now is trading above the top of it, or trading above its 50-day exponential moving average. And that is priced at 33.25. We're at 34.29. But my problem with now just using the VIX, I love it. Amazing tool. But what we've had is just a bunch of back and forth, above, below, near the 50-day. So I don't want to put all my weight right now while we've got this consolidation sideways-ish type move. Remember, in the S&P 500, we put this daily chart up here. This is the one. Look at how price is basically just trading with inside that candle out here from June 11th. You know what that signals to me, Tom? That signals to me, trade it, just trade it, versus you're holding it over a weekend. It's almost more of an investment type of a decision. You know what I mean out there? Well, I don't know if you know what I mean, or you don't know what I mean. But so just sideways-ish type movement out here. I would say that if the NQ closes 2 bars in a row, so the 2 p.m. bar, that's going to be a close call, 148 right now, 99.45 and a quarter. If you do get 2 closes below that, then based upon what you and I looked at on the 240-minute time frame chart, that would support going ahead and holding it over the weekend. And if you don't get that, that supports, you know what? You're a trader. You can always jump back in Sunday evening, or whenever you might jump back in. But if you see price rejecting, the NQ rejecting this, then the strong dog is saying, you know what, I'm not ready to head to the downside. And if that's the case, then you could clearly see the market bounce. Now, the S&P gives us a different message. The S&P would say, or Stevie would say, or the charts would say, hey, Tom, if the ES mini closes below 3019, no, hold on, closes below 3042, hello, Steve-O, close below 3042, then you should stay with the trade. Well, it's trading at 3019 right now. You can see some rising trend lines out here, so price is testing those areas. So if you're going to make the decision to hold it, you're just going to make it off the ES Mini, it would be 3042 would be the number. I'd say the real key out here, back to the NQ, the bottom of its box, bullish structured profile order, 98.31. Now anything can happen Sunday night, Monday, or what have you out there. But if the NQ doesn't close below that, support is held. And that's really the best that I can do for you. I'm not good at a crystal ball. I'm good at saying, okay, support is held, you can take a long position. Resistance has failed, you can take a short position. Areas of support are breaking. We've got changes in trends, things along those lines out here. So, Tom, I hope that helps you out, but I'm not going to focus today as much on the spot volatility index as you and I have previously done. I think we just kind of put that off to the side just for the time being out here. Now, the New York Stock Exchange, Tom, this has been making lower lows with its advanced decline oscillator, and it's in the real oversold territory, but price has not broken to a new low. And that's a divergence that, if it holds, says we're going to bounce. We're going to bounce next week into a holiday weekend. That's its message right now. We'll be right back, folks.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So the 2-minute wrap out here. You got Dow down 560, S&P off 53. Oh, let me put this little spreadsheet up here. So I did, all this COVID stuff in all the cases rising in Florida and so forth. So I went on to the state of Florida website. Here's all of the actual data by day, new cases, new tests, negative tests, hospitalized deaths, and so forth. So what I did was I just simply went ahead and created a chart. I wanted to understand, because if you listen to the news around here, they're trying to scare the what out of you out here. here, but I just really want to understand what's really going on in Florida. Okay, so cases are going up, but what does that mean? Well, here you can take a look at, so the bottom panel, even though it's not labeled, this is the hospitalizations out here. And so you can see the hospitalizations have fallen off a cliff. They have just been simply headed down, continue to head down, even through yesterday. Deaths, you can take a look at this out here. This is just from the data from the state of Florida out here, their exact data. And so you can see the death percentage coming down out here. So, look, it's real, it's serious, but man, they need to give us some context out here. The mere fact that cases are rising out here, I mean, they don't report. We can go back and, anyways, I'm going to get off that. What I want to do is in this next minute here, or 30 seconds, what can I leave you with? Well, let's go back to the ES Mini out here. Let's go back to Peter's call, which was a TD9 count, which we've got. And it is in a bullish structured profile. We're expecting the price to bounce up to 30.28 out here. But that's not going to take place until we see some type of positive market breadth on the 30-minute time frame chart. And we're getting really close out here. We're not there just yet. I take that back. This just flipped in the last 15 seconds. There's 168 stocks trading above the top of their 30-minute profile and 99 below. So, folks, actually conditions right now just ripened up for that bounce to continue out here. As long as it has, as long as it maintains that positive market breadth. Folks, thanks so much for being here. Stay tuned. 2 more great hours are left. Have a fantastic, fabulous weekend, and I'll look forward to seeing you back on a magical, magnificent Monday. Have a terrific day. Take care.